The stock market has been in a bull trend since early April, and in this video I'm going to be telling you guys why and what economic factors might have to do with it. I'm also going to be covering the ES, the NQ, gold, and oil futures. We're going to go over some key levels and some areas and trends that we might look to trade going forward. So make sure you hit that like, hit that subscribe, and join our community at bullishbears.com. Now let's get into some analysis. Now, the market had one of the most insane crashes that we've seen in a long time. Since Trump took office, he started talking about tariffs, and that talk started around mid-February. Since then, he spoke about tariffs on Canada, on Mexico. There was tons of uncertainty, and when there's uncertainty in the market, it fails to continue higher, and we will see a strong pullback. So that's what sort of drove us down up until about April 7th. This is when Trump had his Liberation Day, and just a few days after that, Trump announced that we had our first tariff deal. He announced that we have a deal with all countries except for China for 90 days, and there will be no tariffs, and everything was looking great, and that's what gave us a 10% move in one day on the ES and NASDAQ. Now, this was a great reversal pattern. This is something we like to look for because this down move was brought to us from that economic factor, right, of the tariff uncertainty. Now, at this point that we have our first tariff deal, we had a market reaction, a reversal, and since then we've been trending back higher. Now, when the tariffs began, we sold off over 22% on the ES. Since this day over here, we were able to pull back as high as 19 to 20% off of these lows. Now, with that being said, we have come into a bit of another uncertainty in the market with treasury yields hitting 5%. This is a major red flag for any bull positions and shows a lot of uncertainty in the market. So in this video, I'm going to be showing you guys some key levels I'm going to be looking for and what trends I want to follow and what economically I want to look for. So markets have been looking real strong. We even got great earnings on tech recently, a lot of large cap tech, most of them Meta, Microsoft, Apple, Amazon, all had double beats on earnings. Earnings per share beat and revenue beat. Now, I do post videos, guys. Make sure you follow me on social media. Instagram is Bullish Bears and Kevin.futures. This is my account. I like to post videos, very short recaps on what's going on in the economy and what could have happened that day that could spark a potential reversal or continuation. Now, as we see the past few videos, we had Trump threatens new EU tariffs. This is a new tariff on all EU imports of 50%, and this might take impact on June 1st, so this is something to keep an eye on. Manufacturing PMI was positive, which beat, but the day before that, we had treasury yields, which spiked to that 5%. So right there, we see some inconsistency and some concern in direction because we have a positive manufacturing, but a negative or positive treasury yield. With that being said, we also had big tech doing well. We had a very strong week when US and China slashed their tariffs. There really was a lot going on. But with that being said, right now at this point, we're getting that uncertainty again. Treasury yields are spiking. Manufacturing is positive. Trump threatens new tariffs. What happened the last time Trump spoke about tariffs, new tariffs? Well, we know what happened. This was a strong move to the downside. So what we have to look for going forward in the economy is how tariffs are going to hold and what Trump says. As much as people might not want to listen to him, it's very important because that's what's moving the market right now. He is the president. He has a lot of control at the moment, and we want to make sure we know what's going on in the economy and in the world. So is there a tariff deal? Is there a trade war? If there's a trade war, that's uncertainty. We look to sell off, and we could even look to go long on something like gold. Now, gold trades very well, and we see that gold's been making all-time highs lately. That's due to the uncertainty in the market. Whenever there's uncertainty in the market, large investors and corporations will look to take their money out of stocks and options, and they'll look to invest it in something a little more secure like gold. So we see that when there's uncertainty and worry, gold performs very well. Now let's get into what I do best, and that's going to be our technical analysis. Now I always start with the top-down analysis, so I'm looking at either a weekly or a daily time frame. Now we could start for the weekly time frame on this chart for an example, and we see that for the past, let's see, since that April 7th week, 1, 2, 3, 4 out of 7 trading weeks have been green. They have been to the upside, and from these lows, we have been able to make our way back up almost 23%. So it looks like we have good momentum. It almost seems like we have a pattern, right? We have a green week, a red week, a pullback continuation, a red week, pullback continuation. So do we want to find that continuation again? Now let's go down to a daily time frame, and this is where we're going to have some of my zones. Now, some zones that I'm really looking for and what I would really like to see to help remain on a bullish bias would be to see if this daily resistance level that was over here around 56.72 to 57.73, I'd love to see if it could hold. Now we saw we had a pretty strong pullback. This is when we had our yields hit 5%, and we had a strong pullback. We ended up pulling back towards this zone. This zone did have a good 4-hour demand zone as well, which gave us extra confirmation. We were able to take some nice long positions in our community at Bullish Bears. Now, what I'd look for as well is I'd look to see if going forward we want to come down into this demand zone again. Now, I'm a big fan of using things like volume profile, book map, because when it comes to day trading, order flow is what moves the market. The markets can't move without volume. So what I would use is something like a volume profile, and I would look to see if we have any low volume shelves or any areas that need to be rebalanced. Now, even though we have this demand zone here, we have this much larger supply zone. Now, this was found on the daily time frame, so even if we break this 4-hour right here and we'll mark it out with our trend line, which is around 57.34, I'll still remain bullish because I'm still anticipating buyers to hold this large zone. Now, I know this zone is 56.70 to 57.70, so it's about a 100-point range, but just remember, guys, this 100-point range was from the daily time frame analysis, right? Now, when we were below this zone, we see that price was very bearish. Once we started moving back into it and we tried to sell off, it tried to work as resistance, but that resistance failed multiple times and we ended up squeezing and breaking through. So now this resistance becomes support, and that's what I'm going to be looking for going forward. Now on to the NASDAQ. For the NASDAQ, we already broke that daily supply area that we had. We broke it and we already reclaimed it as support. So I would really want to make sure NASDAQ could remain above that 20,100 area. If we are able to retest within this zone, I would be a little careful and a little patient to see if that's either a retest before we continue, or with ES breaking its own support area, do we want to break through and continue back to the downside? And again, that's really going to depend on the economy and possible tariff confirmations or uncertainty. So let's break it down to a lower time frame. Again, same situation on the NASDAQ. NASDAQ tends to follow the ES very closely when it comes to trending. So what we do is we come down, we do our top-down analysis, daily, 6-hour, 4-hour, and then break it down from there. Right now we're on the 4-hour. I don't see too much. We had a demand zone on the 2-hour down here that did work as support yesterday. So I'll be looking for similar price action going forward. I'll look to see if we could move into this 20,780 to about 20,730 and find some support and push higher. Now sometimes with the NASDAQ, we'll look for divergence. And what divergence is we'll look to see if the NASDAQ wants to break this previous Friday low on Monday and ES holds that Friday low. That would be divergence. NASDAQ would make a new lower low, while ES would make a higher low, and we would be bullish on the ES holding its demand zone. So that's something I might look for going forward on Monday for the ES and NASDAQ. Now, I also want to keep an eye that we're not creating supply zones on our way lower, because if we're able to create resistance while we're pushing lower, that tells me that there's very active selling participants, and we might be starting to build our way back down again. So something I'd look for is possible basing, sell-offs, and then continuation. Now, right here on the 3-hour, we have our basing. We have a strong move lower, but it did not have continuation. From there, we stayed range bound. So what I could look to do is I could look to mark this area as my area of resistance, because this was also my area of support. We see on this candle right here, this was a demand zone. Once we failed it, it became a supply zone. So I could look to see this as our range on NASDAQ. So now I have 21,100, 21,200. This is a range where I would look for sellers to step in. Or if we could break back above it, I would look for a retest for buyers to step back in. Now, when we're looking at gold on the daily time frame, it's almost been the inverse of the ES and NQ. Now, I don't want to confuse anybody. Gold does not inverse the market. However, when there's a lot of uncertainty and worry, a lot of people take their investments out of the stock market and put it into something a little more certain like gold. Now, with that being said, since tariffs were released and announced and we've had the tariff situation and uncertainty, that was about mid-February, right? Even January, we saw we were making all-time highs. At this point, all year on gold, we've been making all-time highs everywhere past this price level. This was our most recent all-time high. This is January 31st right here. We've been making an enormous run at all-time highs on gold. It broke that 2,800 and ran. So right now, what I would be looking for with the uncertainty coming back into the market is gold to continue higher. We might even be able to see possibly 3,500 again on gold. Now, I had an area of resistance which became support on gold, which is right here, this blue zone, and I'll make that a little more prominent so we could see it. And we see that this was an area of resistance. We broke it and it worked as support, right? It found our bottom of our range. Our range high is up here around 34.45 and 34.35, and our range low is 31.77. So with that being said, we would look to buy the lows and sell the highs. Now at this point, we're breaking our way back out of the middle of the range and making our way back higher again. So something I would look for gold is I'd look to see if it maybe wants to break this price level at 34.48 and see if it has good volume continuing, because if we have good volume and prices continuing higher and there's uncertainty in the market, then we could look for gold to make all-time highs and even maybe continue and give us another strong run again. But again, this has to come with some type of uncertainty or some type of strength in a commodity like gold. Now let's take a look at oil. Oil has been, in my opinion, some of the worst price action I've seen in years. Now the reason for that is because oil also gets wrapped up in the uncertainty of tariffs. We get 50% of the US's inventory of crude oil comes from Canada, so when that Canadian tariff started to pick up, we had a strong response. Oil was very up and down, very choppy, but for the most part was trying to trade lower. However, we had on the daily and even the weekly time frame this big green zone, and that's going to be right here on the daily. Now we see that going back even as far back as 2023 in March, this level was a support zone. Even if we stretch it out even further, we see that this was an area of support. I have it locked. Unlock it. This was an area of support even way back over here when we broke above it. We see how when price was below it, it was resistance. Price got back above it, it was support. And that goes back as far as January of 2022. So with that being said, once I saw oil start trading back lower down here, I was automatically staying away from it. I saw that we were trending lower very strong, but that didn't mean I wanted to take shorts. So what that told me was we had a lot of uncertainty. We were stuck between a rock and a hard place because I also had this daily support zone that worked for a long time as well as support until we finally broke it right here, and it worked as a great resistance level. And it worked as a resistance level a few times for potential swing trades on oil to the downside. So right now, in my opinion, oil is a no trade zone. We're stuck between a range of about lows of 55, 58 to highs around 63, 64. So I'd maybe look to see if we have any sellers stepping back in this area of resistance if we're able to make our way back higher, or I'd look to see if we could even scale back above it and make our way back higher on oil and just trend back higher as well. Oil doesn't really like to stay under $60 a barrel for too long. We see that again historically, so it's something to keep an eye on, but we also want to make sure that we're aware of what's going on in the tariffs and in the economy. Alright guys, I do hope this video helped. Make sure you like, subscribe, and drop your thoughts in the comments if you think the market's going to continue higher. Are we going to push back lower with more tariff uncertainty? Or what do you think is going on? Are you trading gold, oil, ES, and Q? Lately, in my opinion, markets have been shaping up a lot better. However, with new tariff concerns, I am worried we might be in for another dip. So make sure you follow us on social media. Bullish Bears is our Instagram. Join our community at bullishbears.com. I live trade there every day from 8:30 to 11. I do my pre-market analysis, and then we live trade. So hit that like, hit that subscribe, and I'll see you guys in our community.